the government shutdown is supposedly supposed to end Thursday or Friday. So within this video, I'm gonna break down what us traders have to be anticipating afterwards, right? What we could actually focus on, looking for opportunities, because we understand that the government shutdown delayed economic data. So that kind of put a blindfold on the Federal Reserve. And now I just want us to be able to understand what we should be paying attention to so you guys just don't get lost. All right. So when this actual shutdown ends, you would exactly know how to capitalize and take advantage of this. Okay, guys, because during the shutdown, we could already see how gold still pushing higher. We see that dollar in the bottom right. You can see like dollar is also still in that range, but dollar is still pushing lower. And then we're going to take a look at the stock market, right? Just look at NASDAQ in the top left. You could just see still pushing higher as well, along with US 30. So we're going to break all of this down. All right, guys, because first, let's talk about gold, right? Because I know one of the questions that I was getting all the time was how come gold is pushing higher and they're talking about ending the shutdown, right? Because even though the shutdown is going to end, we still got a lot of uncertainty that's going on, right, guys? Like, we can't deny that. We still got the problem of growth data for the United States is still lower than expected, right? We got labor data is also showing more people was getting laid off. For the past 2-3 weeks, guys, we've been seeing nothing but headlines of layoffs. So gold pushing higher does give us a sign that there is something wrong with the economy, right? It shows that market fear is still being priced in, right? So that's the reason why gold is still pushing bullish, because also, guess what? The Federal Reserve is dovish, right? The Federal Reserve is still cutting interest rates. Now, that is going to support the gold to push even higher, because when we cut interest rates, that also is a reason for the dollar, right? The dollar to start pushing lower, because when the shutdown actually happened, dollar was pushing higher for the past few weeks, right? Because there's no data to go off of, right? And the last rate decision, Jerome Powell did come out and say there is a possibility that, hey, if this lasts longer, there's no reason for us to cut in December. So that was the reason for a stronger dollar after the Fed rate decision, because they didn't confirm a cut for December. Now, with the shutdown looking in place, we can see dollar is pushing lower with the expectations of the Feds getting the data back, looking for actual rate cuts, right? And with that in place, this is another reason why, if you guys are trading the stock market, right, you see how US 30 pushing higher as well. NASDAQ is pushing higher, because overall this supports a dovish Fed. You know, this is going to support that the markets is leaning more towards rate cuts in December. And this is the reason why equities is pushing higher. Okay. So even though the lockdown situation, I thought that it was going to get in a way in the stock market, I really thought we was going to start seeing some downside on NASDAQ and S&P. I most likely, if this would have lasted for another week, I think all hell would have broke loose. Okay. But I think let's see what happens, right? Obviously, let's see what happens. But the problems that we're facing now is that we are getting little indicators, which I could just show you guys. We are getting, like, even right here, like ADP report shows that the average of 11,000 jobs lost per week in October. So we are getting those signs of the labor markets is actually getting weaker than expected, right? We're seeing like the tariff revenue coming in place. I'll talk about that in another video, but we're getting signs now that even though the lockdown is ending, what happens if economic data now comes back and it's showing that things is worse than expected? Okay. Because this is what I'm going to talk to you guys about next, because as of right now, just markets is focusing on risk flows, like a risk on or risk off market, right? Based off of news headlines. Eventually it's going to start reacting towards monetary policy and economic data, right, guys? So this is where fundamentals come in place, because now when the data starts coming out, this is the direction I want you guys to understand. Okay. And make sure y'all take these notes down so you could capitalize on it. If when we get labor data now, it's the difference between, just want you guys to look at me so you guys could take the notes. When we start getting labor data now, it's going to be a difference between a soft landing and then a hard landing for the Federal Reserve. So meaning, if we start getting labor data and growth data and it's actually worse than expected, right? This is what's going to drop the stock market, because this is going to symbol, right, recessionary fears. This is going to show that there's actually things in the economy that's really breaking. This is what's going to hurt the economy. That right there alone, when markets will start pricing in recession, that, oh, we got bigger problems than what we thought, that's when NASDAQ, S&P 500, Dow Jones is going to start pushing lower because of those cracks in the economy. Okay, so that's what we got to focus on. When it comes to the dollar, if we even get that, still weaker dollar because it supports rate cuts. But the fear is going to actually start bringing down the stock market, and that could cause gold to actually push higher, right? So what happens if we don't see recessionary fears, right? We actually get a softer landing, right? Which is what the Feds want. The reason why we see at the moment, like we see, just show you guys here. The reason why we still see NASDAQ equities still hitting all-time highs, right, is because the soft landing is still being priced in. We see that earnings is actually still doing good, right? We're not seeing the crack. They're not signaling us the cracks in the economy. So if we get weaker labor data, but it's not screaming recession, right? The markets is just going to price in rate cuts, right? The Feds is going to gradually cut rates, but it would still only mean a soft landing is going to happen. So we could still see the stock market rise still, even though they're cutting interest rates, because the economy is gradually slowing down. It's not going to be a hard landing. So earnings could still do well. Yeah, a few people is going to get laid off. Growth may come down a bit, but that just helps the Federal Reserve cut interest rates by 25 basis points, okay? Because they're not afraid of a recession. If things are worse than expected, right? Like what I was saying before, Feds need to hurry up and cut those interest rates to save the economy. That's when the stock market says, oh, wow, things are actually really, really bad. That's when the stock markets could actually push lower, right? And then the Feds is going to step in with quantitative easing. And that's when the stock market rises after that, okay? So just want to give you guys a quick video just so you guys could really understand and how to take advantage of this moving forward. So focusing on when is NFP data going to come out, right? Or how they're going to show the previous data points, right? And also what happens with those data points, right? Because if we see that labor, like I said before, with the labor data is worse than expected, just pay attention to risk sentiment being a factor. But if the data is not that bad, then that could actually cause equities to still push higher, dollar still lower. But now let's talk about inflation, because the possibility of inflation being higher than expected. So if we get CPI data and we see a big pop to the upside in inflation, that is just going to cause the Feds, right, to pretty much, they're just going to pause interest rates for December. That could cause dollar to rise. That could also be the reason for the stock market to push lower, because that higher inflation expectation. But they're expecting that pop to be temporary. So inflation is going to be important, but if inflation is already dropping, we're just going to see weaker dollar, stronger equities anyway. So this is why they're already confident. The Feds is confident that inflation is going to hit 2% eventually, right? So we just have to worry about this temporary upside of inflation due to tariffs, right, guys? So this is what we're going to focus on. Hopefully this is helpful, guys. Leave a comment, and I'll see you guys in the next video.